Next up, we have a panel discussion. You're not used to your moderators singing at you, are you? It's kind of weird. I didn't say I was good at it. I just did it. You're still here, though. It's going to be great. I'll be moderating one of these panels. Can you tell I'm filling for time whilst they change the set behind me? Don't look, just over here, just over here. We don't need to watch what's happening behind me. So we're going to have a really interesting conversation about a topic which would have the potential to be quite complex and quite technical. This next session is all about the EU taxonomy and regulation. Does it actually help? Should we find out? So I'll be moderating this panel. I've got an incredible group of panelists. I think we're almost ready. So by way of introduction, first up, we've got somebody who's worked with both impact startups and impact asset managers, as well as family offices and institutional investors. The head of impact investing at Phineo, Susanne Bregy. We've also got a business angel investor primarily involved in impact investing that founded a novel impact finance boutique that provides the market with authentic finance solutions. The founder of Loom Impact, Rene Wienholtz. He will also be joining us with the Secretary of State and former Chief Economist of BHF Bank. That would be Dr. Phillip Nimmermann. And last but absolutely not least, the head of risk and resource steering of the corporate customer segment of Commerzbank, Rene, Seimetz. Please welcome all to the stage. So I'm sure you're all here ready for an incredibly riveting conversation about taxonomy and regulation. But before we dive into it, I don't want to assume everybody actually understands what we mean by impact investing. I think it's one of those things we hear a lot, it's bounded around a lot, it should be obvious, but I'm not sure it always is. So Susanne, can you kick us off perhaps? When we say impact investing, what exactly do we mean by that? What does it cover?
Thank you so much, Lovelda. Pleasure to give you my 2 cents on impact investing and how we do interpret it at Phineo. When we talk about impact, we really talk about real-world impact. And we clearly say, if you look at secondary markets in the public space, real-world impact tends to be limited. You might obviously have real-world impact through IPOs and capital increases and some ESG engagement strategies, but mostly it's about trading. I sell a stock, someone else is buying it. So we talk about real-world impact predominantly through private markets, which includes private equity, venture capital, private debt, infrastructure, real assets, where you are, as an asset owner, financing directly companies or projects. So this difference between trading versus financing is for us the big deal.
So it's a distinction between trading and financing.
Yes.
Rene, you've been in this space for a while.
Obviously.
Do you agree with this, or do you see, when we're talking about impact and investing, do you see it slightly differently?
No, I would just add to that. For me, at least, as an impact investor, for me, the SDGs play a big role. So this is kind of the backdrop. It's a kind of great marketing tool that the UN kind of invented in 2015, which means the Sustainable Development Goals are, for me, a kind of agenda to look at certain topics. This is the first thing. The second thing is exactly what you said, additionality. So it's not trading one share between us, and that would solve nothing or would do nothing good in the world, but to give an additional amount of money towards impact investing, that's the same thing. And intentionality, of course. And that's, if I, for instance, look at startups especially, I always say when you invest in startups, it's all about the team. But especially in impact investing, it's really, for me, it matters that the people that run this business are absolutely convinced about what they do in regards to the ecological or social effects that they want to generate. So intentionality is something very, very important.
Intentionality is a really key word. Dr. Phillip, I could see you over there smiling and nodding. I'm not sure if you were agreeing or thinking, I'm not quite sure about that. So I'd love your take on that. But also, when we talk, what do we think the role of regulation and taxonomy should actually be?
I mean, if you look at financial markets trade expectations. They trade expectations about future revenues, future costs, future risks, opportunities. But if you do that, you have to define what you're trading. So taxonomy is nothing but the language. You define something, what you're talking about. And I think it is important to speak a common language, otherwise you don't understand each other. And if you want efficient markets, you need one standard definition. And taxonomy and regulation does that, tries to define an aim. One can discuss whether it's the best way to do it, because the taxonomy is based on activities. It could be based on aims directly, which is an alternative approach, but it's based on activities, green or not green in this case. But I think it's important. Will it change the world on its own? No. But will the world change without regulation and taxonomy? No, it won't. You need these standards as a necessary condition for markets to trade expectation properly.
Well, you saying that, now I need to hear from a banker. I need a banker's perspective on this. Martin, regulation, taxonomy, how should it work and how is it impacting you?
Well, Lovelda, thank you very much for the question. The regulation and the taxonomy in specific, they provide a target. They outline how the world should be. And I think that's important, otherwise it won't change. I agree with your statement, absolutely. What it lacks a little bit, and what is the requirement for all the real economy and the financial industry to find its way towards the target. So it's all about transformation in today, and sometimes regulation does not, either goes too far in defining targets, to be too strict, to be met in a sensible time frame. And sometimes the regulation misses the pathway to it. If we look at investments and investment returns, then we are not looking about 30 years. We are looking at investment returns in 2, 5, 10 years. That's how economic market work and how the capital market works. And here, I think there's a big challenge to transform what the taxonomy rightfully outlines to the actual doing.
So we're talking a lot around the taxonomy and the regulation. What does it actually do? I think we just need to cut to it. What does it actually, in its current form, what does it actually cover, Rene? What are we talking about that it actually covers?
At the moment, it's about the E in ESG. That's basically it. I mean, there's a pathway towards also other aspects to be assessed within the taxonomy, but at the moment it's about the E. And when it comes to ESG, I would say there's, you said a very interesting thing, because what the taxonomy really does at the moment is to allow the sustainable, or to allow the economy to be more sustainable in future, because we need to know what our footprint is, and that we definitely don't harm the world more than we do as of today. What is, for me at least, as an impact investor, is lacking, is that there is a clear perspective on what solutions need to be delivered. And of course, this is a very tricky topic, and I think it's a good point to start, but it needs to be much, much more detailed and much more solution-oriented than just to look on footprints, not to make the world worse, but we need to make it better.
Susanne, do you agree? Is it just the E?
No, I agree, but it's not just the E.
It's lovely to disagree.
Of course it's about the E, you're absolutely right there, Rene. But I do believe that something that I like a lot about the taxonomy, and if I say a taxonomy, is it okay if I also include the CSDR? It brings in something that was hugely missing in capital markets, which is the notion of double materiality. So if you look at traditional rating agencies who rate how the companies, the listed companies, manage the risk stemming from ESG and not the real world impact that they have out there. Coca-Cola is still putting a lot of sugar in its products and using plastic bottles. The CSDR is going to introduce this notion of double materiality, which for me has a huge potential and is absolutely necessary. It's also hugely important, utterly important, that you have, that you try or that you establish a standard. Coming back to, you need to know what you're talking about. And okay, it's European only for the time being, and obviously the big picture should be that it's going to be a global standard one day, what ISSB from ISFR Foundation are trying to establish. So I think it's heading in an absolute good way, but I think sometimes it's too complex, and I think nearly everyone is confused.
Dr. Nimmermann, do you agree?
I don't know whether everyone is confused, but you're right. We have a tendency to make things more complicated than we need them to be. I don't know why it is the way, but if you look at the activities, I mean, I don't know how many, probably 400 pages you have to read to define all the specific activities in a specific branch, depending on a specific company size, and then you add everything up, and then you divide it by the total amount of assets, and it gets quite difficult to interpret those ratios without someone explaining it. But nevertheless, it's a way to formalize the uncertainty we're living in. That's the first step. And I think it's actually a bit more than just the E at the moment, because we also have the threshold. It's the do no significant harm relating to other environmental aims or goals which are not tackled yet by the taxonomy or by the disclosure, only the first two goals so far. But it's also got a threshold for social issues. So you should not go below certain international labor organization working standards and things like that. And that is also important to put, at least, although it's common sense you shouldn't be doing that, I think to disclose that is one step beyond where you are now. And the next step would be the social taxonomy, which is much more difficult to define. Because, I mean, we can agree on the carbon dioxide footprint, and we just measure carbon dioxide, we measure certain activities, and we can even probably measure biodiversity in one sense. But social issues, it's about justice, to get a common sense, what is just, what is fair, how do you treat people in the long run. That is going to be difficult, but the important thing is, actually more important than the actual tiny weeny definition, is to talk about it. Because beforehand, capital markets didn't talk about it. It was all about quick money, all about this day, perhaps the quarter if you're lucky, never much more than 2 years in front. The revenues in 5 years were just sort of, guessed and then discounted, doesn't really care. Now we talk about it, and that is really important, because everything, your responsibility starts with your enlightenment to understand something, and then you are responsible. What you do with your responsibility is up to you and others to measure you on that. So talking about it is very important, perhaps even more important than the nitty-gritty single activity definition. And what is now needed, as you already said, once we have defined the aim, we have to define milestones for the path to reach this aim, the transformation path. That's the important and the really challenging bit. How do we get there? If we all invest in green assets, who's going to invest in the rest? What's going to happen to them? They're still there, and they're still going to be financed, so you haven't really changed anything. How can you actually finance the change? That's the important question, I think.
Transformation, yeah.
And it is really important we're focusing on transformation. I think you bring in a really key point there, which is it's starting a conversation that needs to happen when we're talking about financing. But you also raised something there about this notion of do no significant harm. And do we understand, I want to kind of understand, do we understand that enough? Every organization tends to have some sort of unintended consequence. We're doing great over here, but by virtue of doing great, there's something happening over here that isn't quite so great. Martin, do you think we understand what we mean by this notion of do no significant harm, or is there more conversation to be had around that?
Yeah, I think fundamentally we tend to understand do not significant harm, and as just alluded, I mean, there are some thresholds already defined in the taxonomy. But we have to question ourselves whether those thresholds are a little bit far out, and we need to take sensible steps. That would require from each of the participants in the capital market and the capital allocation to make decisions. And those decisions are currently not really supported by the regulation. We talk about regulation here, and everybody's struggling a little bit, as you said, a little bit frustrated of what can I really do and implement in the next steps? What is my next concrete step to implementation? Am I doing something wrong because I do not meet this threshold in the first instance, but maybe only in the second step because of technology shortages? Very simple, yeah? I mean, electronic cars, the batteries. I mean, we can discuss endless. Just to make one example, is this doing a significant harm by producing more batteries, yes or no? I certainly will have arguments for and against it. At some stage, we have to make a decision, and this decision making is up to the market, to the real economy and the finance economy to do the decision jointly.
Susanne, how do you feel about that? Do you think we understand this concept
I'm
enough?
not too sure about that, because of course you do have those 6 defined aims, goals. So I think that if we really try to look at each one of them, yes, the answer would be yes. I think we can understand it. But then to what Martin just mentioned, very often it's grey. Yeah. It's a very greyish area. And it's not easy to draw a line every time. And as you rightly pointed out, very often every business would have unintended consequences. So where the question of how to quantify, but in the E, we should manage. And yes, let's see what's going to happen with the S or the G. But then also the extent to which, I mean, what if I do that amount of good and I harm to that extent? I mean, assuming that you could measure it, how do you weigh it against each other? I think there is no black and white. There are lots of greys in between.
I can see Rene's like,
No,
I'm not sure how I feel.
It's not that bad. No, no, I would not say. I agree. I agree to you, and I agree to you.
You're agreeing?
Yeah, I agree, but
I was waiting for that.
I think the most critical German word, but. No, what it misses at the moment is that we say we need to take into account, let's say, the ecological factors, and we know what footprint we have, and we know what path we want to go down. But what it is lacking for me is especially to say there is no kind of incentive in the whole scheme, which means you need to report that, you need to be better, you promise to be better, and probably you set a little bit of a goal. But if you want to provide solutions, and even for, let's say, small, medium-sized companies, or especially startups, but small, medium-sized companies, then it could be that you define a goal, let's say, in eliminating some, for instance, the pay gap. Yeah, it's just some social aspect here. Just to say, we eliminate the pay gap by within the next 3 years, and this will probably give an example. Probably I could attract investors to it, because if investors come to me because I have a kind of very, very green part of the taxonomy or a goal, then they could invest against what they call brown score. And this could be incentivized, so it drags more money towards this company because they set special goals. This is at the moment missing, and I know it's hugely tricky to implement that, but this is something I would really admire to see somewhere in future. And I know I'm probably the guy that is a little bit more on the optimistic side, but hopefully we see this, because this would really drag money towards the table of impact investing.
Dr. Phillip, it feels only fair, seeing as you mentioned it and you sparked this question, that I come back to you in terms of how do you think it's possible and that we truly understand this notion of do no significant harm? Or is there more dialogue to have around it so we can have more clarity?
Well, I think this discussion already shows it that there is a trade-off. I mean, once you introduce or add on the social taxonomy, there'll be true trade-offs between environmental issues and social issues, and you have to handle this trade-off. But that's up to political discussion and democracy to decide upon. Transparency is such a powerful instrument because nobody forbids to say, my aim is to smaller the gender pay gap, for example. You can just write it into your whatever report you have, and the more people do it, the more it becomes visible to investors, and they can decide upon what to do. I don't think you can force someone to say you have to decrease the pay gap by 10% every year. One could do that, but I think that's quite difficult to put. But regulation is important, and we already do have incentives. We have, first of all, the price for carbon dioxide. That's the meta incentive in the long run. It's still far too low as it is traded, but I think by reducing the emission certificates, it will increase. And I think regulation, I mean, it will start with disclosure. You have to disclose all your green assets and all that, and there will be the day when regulation will say, and you have to fulfill a certain ratio. It will not be today, but you already saw that the European Central Union had a stress test on environmental issues, on climate issues, and now every company, not every, but many companies are obliged to disclose their ratios, their green asset ratios, and stress their balance sheet. And it will become part of regulation, and the more you sort of tighten the whatever belt, the more incentives you do have to go in towards that direction. But you need consensus. You cannot simply do it on one nation on its own because we have global capital markets.
Yeah. I think it should be a global standard like you have for financial accounting too.
Yeah.
It's a complex arena that we're in, and what I'm hearing is the taxonomy and the regulation gives us a really good starting point. How should we be engaging with the regulation and the taxonomy right now to get the most from it, Martin?
Well, first of all, talking from a bank perspective, as a regulated institution, we need to take that very seriously, and I appreciate that we are talking about these topics. And in fact, I think financial institutions, because they are regulated, are a little bit further pressed to implement as much as possible, especially in their digitized world. The other side of the coin, Rene, I can give you a positive message. It's already happening. So you could see it at our stand out there, how portfolio management is looking at it. And I promise you, I have you first examples where exactly this is happening, what you're just saying. So it's really happening. Companies who feel comfortable define their own KPIs according to their own ability, which are ambitious for them specifically. They follow it, they want to get finance against it, they sign a contract like a covenant. If they breach it, they are breaching the contract. So companies are starting to willing to implement and show it to the capital market. It's at the starting point. It's not yet there. Large companies do it for longer time already. We know that, but we are talking especially from the medium-sized companies when they start to do it, and it's more widely accepted. And if I look at our own balance sheet, I have a question. I mean, the EU taxonomy, it's focusing on the activities in the EU. Our balance sheet comprises also activities of our international clients, which are not based in the EU. I think here the international regulation needs to close a little bit a gap for the banks and for the financial institutions. Otherwise, we may risk a wrong allocation of capital.
You're throwing it all out in there. I mean, it is not the simplest conversation to have. We are doing our best to make sure that it's accessible and understandable because there are so many details in it. Susanne, as an investor yourself, what would you say, how should we be engaging right now with what we have?
I'm not sure if I'm the right person to answer that, because when we invest in private markets, coming back to our definition of impact investing or impact. And for the time being, regulation deals with large companies and listed companies. And this is going to be the case for the next couple of years. I think it only starts towards 28 that CSDR is going to be applied to non-listed, medium-sized companies, and let's see what's going to happen to the world of startups, which obviously should be thinking along those lines even when starting. But this is also one of the challenges that I'm facing at the moment. I mean, on one side, you're talking to Siemens. On the other side, you're talking to small private companies. And don't forget, we talked about while preparing this call, this panel, what does it mean financially? What does it mean when it comes to capacity, financial burden? Would it skew the markets more towards the big asset managers, the big service providers, the big companies who do have the financial resources and HR to stem with those challenges versus the startup ecosystem? I think this is something, we have time. We can think along those lines, but I think we should think along those lines, how to adapt it to different sorts of companies.
It's a great point, because who does bear the burden in terms of being able to apply the regulation? Is it Dr. Nimmermann? Is it skewed in one direction?
Obviously, it is more difficult for small companies to fulfill, you could call it bureaucracy, than for larger ones. And that's true. And I think that's why it is our duty as politicians or as the government to help, especially small and medium-sized companies, but also the whole community. What we do in Hessen, for example, we started in 2016 what we call the Green and Sustainable Finance Cluster Germany, which is actually the community of banks, insurance companies, asset managers, and academia, to talk about all these issues. And they were actually part of formulating the taxonomy and discussed these. We're supporting banks to reach their zero goal, the net zero emission alliance, and we're supporting them. And another thing is what we're doing, we're trying to help very small companies to report on sustainability issues by using artificial intelligence and big data. We are just asking them for perhaps 20 questions. What is your energy consumption? How large is the office space you use? And from those 20 questions, via artificial intelligence and a macro data base, trying to create a synthetic sustainability rating and reporting for them, which they can use if they wish to get finance. If they don't wish to do it, they can simply read it and do nothing, but they can do something with it. So we're trying to help those who are in need, and we're putting a lot of pressure upon especially very small companies, and I think that's why we at the same time help them to tackle these challenges.
So it is considering, there's more of a burden on a smaller organisation, but it's not as if it hasn't been considered. Rene, I kind of want to jump to you as our optimist, our in-house optimist today. Where would you love to see the regulation and taxonomy go to? If you were thinking the evolution of the taxonomy and the regulation over the next 10 to 15 years, what would you love to see it do?
I mean, some are on the roadmap already. So when it comes to social taxonomy, I think they're working on it. I've seen drafts and so, and especially the amount of companies that need to communicate or to publish their taxonomy data is growing due to the situation that over the next years, even smaller sized companies will be obliged to do this. On the other hand, I definitely see the burden for these companies. But we should help these companies with these kind of tools that you probably mentioned. On the other side, I a little bit disagree about just generating synthetically data upon, of course, this is AI and something, but we should really enable those companies to do this kind of assessment in a more easy way by themselves on their operational data. And to guide their way through it in a more easy way. Because when you look at all the regulation, and I think you said it, it's about 600, 900 pages, what it is, nobody can read it. So we definitely need tools, like we provided, for instance. We definitely need tools to make this more accessible, to help these smaller companies on their journey towards it, and especially also the larger companies to get rid of their just statistically based reporting, because we just calculate our way through carbon neutrality. Because I think in 20 years, we're all carbon negative all over the world, and it's getting hotter and hotter still. Okay, there is, of course, lagging effects, I know, but this is also due to the situation that we have so many artificial instruments at hand that makes this easy to assess, of course, but shit in, shit out. That's it. So what I really love to see is a little bit more, let's say, hands-on work from these companies and more tools that are delivering better data for predicting the future a little bit better.
Martin, I could see you vehemently nodding your head over there.
Rene is talking out of my heart. Perfect. We should meet after the panel here. Definitely. No, I think it's absolutely true. Looking at or phrasing it a little bit different. ESG and the 17 UN principles are really going into the business model of each company, be it on the real economy or the financial economy. And reporting itself will start to have the discussion. The transparency is absolutely necessary to kickstart the discussion. But the real truth of it is doing it, implementing it. And that's the entire business model. And reporting itself will not solve that. It's only a starting point. And here I think needs to be the next step of over the next years. And that's way more than the taxonomy currently describes. But the taxonomy gives like a star in the future, it gives the light where we should go to. But we need to start today with real implementation.
And Susanne, what would you say that implementation could look like? What would you like to see? How would you like to see things evolve?
Take out complexity. I think it's too complex. Who can read 1,000 pages? Who is not a lawyer and loves to do that? There are reasons why I never went into law. S is absolutely important to me too. Just seeing it pushed into the next parliamentary term is not something I like to see. And I think this is a little bit, Martin, what you were alluding to as well. I would love that businesses start to think this way and to mean it, and not just because they have to, because of a regulation. We have to start a new way how to do business. And this is, for me, the big transformation that is needed. Where you are an impact startup or a fully fledged 200 years old listed company.
It's a beautiful note for us to leave on. We've got a few seconds left, and I'd love for people. We can only go over the top of this. It's a very complex topic. There's a 600-page report if you want all the details of it. But I'd love for people to know how they can, really quickly, how they can continue this conversation with each of you individually. So we'll start with Susanne, and we'll quickly go down the line.
I'm here today. I'm here tomorrow. I'm on LinkedIn. I work at Phineo. Happy to talk to you.
Rene, how can people stay connected?
First, it's quite easy because I'm also around. I'm also on LinkedIn, by the way, and we got a booth down there, Loom Impact. It's the booth N59, and hope to chat with you.
Fantastic. Dr. Nimmermann, how can people stay in touch with you if they wish to, if you don't want to hide from us all by now?
Unfortunately, I will not be here much longer, but many of my colleagues are here. We've got a booth. It's the Startup Hessen booth, where we organize all the startup activities, and the colleagues there are more than willing to start a conversation and discuss all those issues.
Fabulous. And last but absolutely not least, Martin, how do people stay in touch?
Yeah, I'm here today and tomorrow. I'm on LinkedIn, and very important, I'm at the booth of Commerzbank. You will also get a nice, small, good-tasting espresso, and you're happy and welcome.
Thank you so much. Give them all a beautiful round of applause. Thank you.